Good morning, traders. It is Wednesday, March 5th. Taking a look at the charts, equities are a little mixed this morning. NASDAQ slightly positive. The Dow is slightly down. Everything's just flip-flopping between red and green this morning, so it's a fairly dull session. Overall, if we take a look at the S&P 500, let's take a look at, we've had a very sharp pullback. We ran the low over here from January 13th. We talked about that twice yesterday, and we saw the stops get run. We saw a huge volume spike, and then the market put in a little bit of a rebound. We can see massive volume. We saw the VIX spike yesterday, the put-call ratio spike, our panic selling indicator over on our 30-minute chart saying everybody was dumping shares and completely panicking out. And that is a sign that the market is trying to put in at least a short-term bottom. But if we take a look at the daily chart, if you notice we have these red bars with our cycle analysis. So we have every time we get these red bars, this is, while the market trend is down when we have these red bars, this is telling us that we are in a multiple cycle low. These can become a standout low on the charts. We had one about a month ago, and now we're just getting back into one here. So it'll be very interesting to see how this unfolds and how it goes forward. Obviously, look at the volume on the SP 500. Massive selling volume, some serious distribution. So it'd be interesting to see how the market rebounds from here. The big question is, I talked about how it looks like it's going to be a washout low yesterday, meaning it runs the stops and then it has a rebound and bounce back up. And it could do something like this. It bounces up and then goes even lower. Or it could just bounce up here, stabilize or build a bull flag or create an impulse move. And that first pause and pullback could trigger into a bull flag and actually pushes up to nominal new highs. We just have to wait and see. Nobody knows where the market's going. We have to get a gauge for it, but we definitely don't want to hold stocks when there's huge selling going on and the short-term trend is down. So given that, if we take a look at the SP 500, yesterday the market had another big move to the downside. And if we were to take a look, so this is the SP 500. If we take a look at SPYD, which is the dividend stocks, they have been holding their ground and somewhat drifting sideways and higher as that defensive play. Now they're well off their highs and they continue to generally underperform. But yesterday, look at yesterday, we saw panic selling yesterday in the stock market, and this is why dividend stocks can be so dangerous. And it's also giving us a little bit of insight here as to a short-term market bottom. So why dividend stocks are dangerous is when the masses panic out, which is what we saw yesterday. Panic selling volume, panic selling on the VIX, stops getting run. When all those retirees with all those dividend blue chip stocks and stuff sell, they all dump their shares. They all get out at the same time, and a lot of damage gets done to the dividend space. The also flip side of that is you can also see this as people getting out of the dividend space, and they could also be rotating into the regular stocks or growth stocks. They want to get out of these boring things now, and if money's coming out of dividend stocks, it could get put back to work into a more aggressive sector like the stock indexes or something like that. So if money's coming out of the defensive play, it could rotate into the regular index or other stocks. So there's a couple ways to look at it. It can be a blend of both of these. Again, nobody actually knows exactly what's happening and why. These are just theories, but this is what we see all the time. If money's rotating out of defensive plays, it's generally going to go into more of aggressive stocks. And if money's coming out of dividends right now, and we have that cycle low on the SP 500 I just showed you, money's going to naturally want to go back into the stock market. And once these people who panicked out start to see the market stabilize, they're like, I just sold at the freaking bottom. They are going to go back into the stock market, and they're going to think a new big rally's starting. So they're going to go into the more aggressive stocks, not into dividends. And dividends can continue to underperform. And we see the stock market have a bounce. Hopefully that made sense. I get it in my head, but sometimes I have troubles trying to explain multiple levels and layers at the same time. We can also see here on the SPYD, it actually dipped into an oversold territory. It tagged the 20-day moving average. It ended up closing sharply lower on the day. For the last 10 minutes or 30 minutes of the day, it just went into free fall mode. People just bailing out of their big blue chips and their dividend stocks, saying just if the market doesn't rebound by the end of the day, get me out. And it didn't rebound, and it's just like people dumped their shares. So that'll be very interesting. Let's take a look at the rest of the market. We have the dollar moving down again today. Obviously, lots going on with Trump. We look at this big pattern to the upside. It's definitely picking up free fall kind of mode here. Multi-wave. This looks like a 5-wave correction. 1, 2, 3, 4, 5. And we'll see how this unfolds. We've broken a couple of these pivot lows, and it is getting oversold and settling down into a pivot zone through a consolidation here. Obviously, falling dollar is helping. It has been helping gold. It's not helping it today, but we have been seeing gold have a bit of a bounce and move higher. Overall, gold is starting to pull back a bit today, which is kind of interesting. We are seeing gold move down, which is a defensive play. Let's just take a look at utilities in pre-market. Utilities are trading lower. Consumer staples are also seen as a defensive play. They are trading lower. And XLV, which is also a defensive play, is trading lower. So dividend stocks, all the defensive sectors are trading lower today. The stock market looks like it put in a washout low, meaning people are getting out of the boring defensive plays and they could move into the stock market into aggressive stuff. And we see that cycle low kick in and we see a strong bounce. And again, the question is, are we going to get a bounce in the market or is it the start of a new rally? That we have to just wait and let unfold. If we take a look over at, let's take a look at oil, down 2.25% this morning. Oil is definitely getting to this point we have touched on many times before on the charts and also in our mentoring sessions and updates. Oil is flirting at this really critical support level that once this level breaks, all hell is going to break loose, I think, in the energy space. My daughter was telling me that supposedly Trump kicked out the Ukrainian president in some conversation, and he's like sided with Russia now, which means Russia oil will probably open up, and U.S. is, I mean, who knows? Oil could break down. I think all chaos. I don't know exactly what's unfolding in that side of things, but Russia and Trump and oil breaking down, all this stuff is definitely creating some huge shakeup and chaos, and it looks like oil wants to break down and have a big drop, and that is going to hurt the energy sector stocks big time. I think once we see oil break down through that level, when we take a look at energy stocks, which have been trending up and to the right, I think they've gone from an uptrend to more so. We've got a series of kind of higher highs, all of these higher highs and higher lows, and now we're more so like double top, or it's starting to slope down, and eventually this would, bandsaw its blade kind of to the downside. I feel as though this upward momentum has stalled and eventually it's going to break down. If oil drops dramatically, the profits for all these companies is going to vaporize and drop as well. And I don't know why these are so highly valued when oil is at lows and on the verge of breaking down. So there's probably going to be some big catch up in terms of stocks having to catch up with the low oil pricing and low profit margins. Other than that, let's take a look at the long-term chart. Again, the long-term chart is pulling back to the key moving average here. We've had a sharp pullback to it several, was it in 2024? Last year in July, it had a bounce off there. We are back at it. So this is getting pretty critical to see where we are going to be with the stock market. The overall scenario here does show us that this price action right through here is very similar to this price action right through here. At this top. So we'll just see if we get a bounce and if it continues to chop around and then eventually breaks down, or if it is going to rebound and this be a pause. Again, we just have to let the markets unfold. Long term should still be long the markets. Short term, we're out of the markets. And that's how we just have to kind of manage the positions at this point and let things kind of work themselves out. Anyways, that's it for now. Talk to you soon. Bye-bye.